Hello, everybody. So today I want to talk about Occam's Razor and I want to talk about MSTR, remaining the common ATM master, the pioneer of this technique, of this strategy of using your common stock as the main product, the pioneer that has been copied by everybody else, yet the company that does it the best is still MSTR. MSTR is the ATM, the common ATM master. Today, of course, we received news, the buy. There was a buy. And you can see he bought $449 million worth of Bitcoin at 110,000, almost 111,000. So BTC yield well on our way to 30% towards year end. Too bad that we wasted so much time not ATMing for 3 weeks because of all of the market pressures. Saylor is back to this simple conclusion, which is the simplest solution is the best solution, and the simplest solution to earn a Bitcoin yield right now is to use the MSTR ATM. We have not reached prime time for the for the preferred stock ATM. We are not in prime time there. We are in prime time for the MSTR ATM. And of course, I was very excited about the change now 2 weeks ago. And now this is the second week in a row that we have a multi-$100 million buy of Bitcoin thanks to the common ATM. And so that update from 2 weeks ago was more than welcome. We celebrate that update today. Today's buy is enormous again, almost $500 million. I mean, keep in mind, various companies that I've covered on this channel who follow this strategy who are not trading in market cap, where it's not even their market cap. And MSTR buys this much in a day. Out of the 471 million bought today, 90+% of this is due to the common stock. And you may ask, well, what a BTC gain is this? How much money did we actually make? Well, it's very simple. We are trading at an MNAV of a 1.59. So the way I look at this, of course, is we're selling $1 for $1.59. We are printing our shares. Our shares is our main product. The MSTR ATM, the MSTR shares are the main product. We're printing these shares. We sold 1.2 million shares in 1 week, and we sold them at a 37% margin. How do we get 37% margin? We divide 1 by 159, and we remove that from 1, and that's the margin. That's the 59. That's what it corresponds to. It corresponds to margin. It's like selling $1 for $1.59. And so when we issue $425 million worth of MSTR ATM, we achieve a 37% margin on that, which means that the BTC gain on this week's buy was 157 million. That was a BTC gain. Note that on a price to par basis, we actually lost about $1 million on the Strike ATM, and on the Stride ATM, we lost about 300,000. So I'm ignoring that, and of course, the Strife ATM historically, as we've made money on that, we actually made a little bit above 3 million on the Strife ATM. The Stretch ATM, we're still waiting. So I'm kind of ignoring that right now. Kind of a break even, maybe just a tad of a BTC gain on this, but not much. Most of the action is taking place in the MSTR ATM, in the MSTR Common, the issuance of MSTR Common. So in a week, 157 million in BTC gain in a week. Over 48 weeks, because we know that he doesn't ATM right before quarterly earnings, so he can only do this 48 weeks out of a year. 157 times 48, that's $7.5 billion in dollar gain, in common ATM dollar gain. Current market cap of MSTR is $99 billion, and so you make weekly 157. You make, if you instant that and you analyze it instantly on the instant number, that's 7.5 billion. So you divide 99 billion by 7.5 billion. What do you get? You get a 13 times price to BTC dollar gain is a 13 times. But of course, this is not the right way to calculate this, because we have a highly sellable asset on the balance sheet, which is the Bitcoin that has been accumulated prior, that has accumulated in the past. And so really 73% of the market cap of MSTR is easily sellable through factor markets. It is not intangible, it is highly tangible, it is Bitcoin. And therefore, I believe the better way to calculate that is to remove the previously earned Bitcoin reserves. The reserves have to be removed, and we have to only take the intrinsic value. And so if we only take the additional value on top of a Bitcoin of MSTR, if we only take that value, we actually only have 27 billion on top of a Bitcoin is the value of the company. So if you do 27 billion, the value of the company on top of the 73% of the company's worth of Bitcoin, on top of the $70 billion worth of BTC, you take that money on top of that, that intangible, right, the intangible value, and you divide that by the BTC gain of 7.5 billion. What do you get? You get a ratio of 3.6. This is way too cheap, in my opinion. I believe that eventually, as the market catches on, as the market sees that Saylor is consistently able to earn outsized Bitcoin gain every week, we should see that NAV rebound. We should see the rebound continue. Note the continuation of this rebound too. Well, okay, Bitcoin's up today, so strategy kind of lagging Bitcoin, but it depends on which side of the day you look at. And over the longer run, in my view, we are seeing a slow, albeit slow, I'll give that to my viewers. It's been slow, this recovery, but we are nonetheless seeing a recovery, and that recovery, in my view, will continue. We are inevitably propping the stock up because of the Bitcoin bag just being accumulated and just going up as we go. Over the long run, MSTR is still in 90+% average annual return territory every year for now more than 5 years. The strategy, the best strategy, is still the easiest strategy. It is still selling MSTR's main product, which is the MSTR common shares. The era of preferred is coming, but it's not coming just yet. We've seen a re-rating in Stretch over the past 5 days a little bit. We may have to wait a few more weeks until Stretch can be ATM'd. Remember, Stretch needs to be above $99 for him to be able to ATM that. And I believe that these instruments were preferred instruments, these dividend instruments issued by Michael Saylor, I believe they will be more and more attractive as we are approaching a rate cut. Note, the rate cut has crossed the 90+% territory. We are now in the 90+% territory of a 25-point basis cut in September. And of course, this is very, very bullish for the market. And this is going to be bullish for debt instrument like the preferred, who should rise, accordingly as the yields on so many assets are dropping when the Fed drops the rate. So as we are entering this rate cutting cycle, the preferreds should take over. But right now is not the preferred's time to shine. Right now is the common ATM time to shine. That's why MSTR remains the ATM master. And this is the second week in a row where we get a major buy, 90% due to the Common Stock ATM. And I'm very, very happy to see that. And now we're just waiting for our press conference. Looks like the market is not going to be good tomorrow again, because tomorrow we have our press conferences. In September, the market just doesn't seem to want to go up. September may be as bad as August. I don't really know. But if you're a long-term shareholder, the future is looking bright for MSTR. And I am keeping all of my shares, and I am happy to own it over the long, long run. This was not investment advice, not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.